Hello everyone, welcome to Idea Hub. Today we have with us Mr. Mahendra Jayasekera, Managing Director Lanka Tiles and Lanka World Tiles, to discuss about tile sector and its outlook. Welcome Mr. Jayasekera.
Thank you.
So to start off with, when we entered into this pandemic, tile sector was expected to perform the least due to its exposure to construction sector. But as we sit here to discuss the industry outlook, it has outperformed most of the listed counters in the Colombo Stock Exchange. So if you can give some context into how well you have capitalized on this opportunity.
Yes, actually to begin with, if you take pre-corona period, pre-corona financial year, what we saw in the tile sector was across all companies there was a increasing inventory, right? There was a big stock build-up. So much so, Lanka Tiles Group between Lanka Tiles PLC and Lanka Wall Tiles PLC had about 10 months inventory, and it is true for other companies as well, because we saw that happening in the industry, because the industry capacity could not be sold in the market due to low price imports coming into the country. So what happened was, with the pandemic and the lockdown came the import ban. Now actually at that time we did not expect the import ban to last so long, and we also did not expect the construction activity to become zero. We realized and expected that the construction activity will slow down, and we were hopeful that we would be able to sell some quantity of the inventory build-up. But actually as time went by, what happened was the import ban became a long-lasting thing, and the construction activity also slowly started, and as a result of it we were able to sell down our inventory. I think all players in the tile industry have been able to sell down their inventory, and the profits we have realized during the last financial year, and this financial year 2020-21 financial year is largely due to selling down of stocks. And now at the moment I think most of the companies have sold down their stocks and running on current production, and it is true for Lanka Tiles Group. So we are basically now selling our current production. So that is how the situation has unfolded, and that is how the companies have benefited from this lockdown, the pandemic lockdown and the import ban.
Can you please give us, our audience, a bit of understanding about the local demand and supply dynamics about the tiles industry?
Actually, before the pandemic, the industry dynamics were as follows. Now, the total demand was about 26 to 28 million, say 26 to say 25 to 30 million square meters a year, and the total production was about 16 million square meters per year. But even though we produced 16 million square meters in the industry, we were not able to sell that quantity. That is why earlier I said there was a stock build up, right? So my estimate is that the industry sold at best about 13 million square meters that year. So there was a 3 million square meter stock build up. So say 26-27 million demand, then the local manufacturers sold about 13 million, maybe a little less out of the 16 million volume they manufactured. So we had about 50% of the market. The local manufacturers had 50% of the market. But now what has happened is, due to the pandemic, the market has dropped to about maybe 18 million square meters, and we were selling that 18 million square meters at the beginning of the year. But now, as I said, since we have finished selling down our inventory that was building up, now there is probably a shortage of about 1.5 to 2 million square meters per annum I am talking about. So now my estimate is we have a 16 million square meter production, and there is a demand for about 18 million square meters, and there is a 2 million square meter shortage in the market.
So lately a couple of press articles quoted that there is a possibility of relaxing the import restriction placed on tiles. So what we understand is the new cess will be 490 per square meter compared to previous 180 per unit. So do you see this as a positive development, and if so, why?
Yeah, actually it is a positive development. We never believed that the import ban would be a long term solution from the industry. I mean, from a selfish point of view, we would like the import ban to continue because we will be able to sell our production, we will be able to make money without a big struggle. So, but you know, as a country, as an economy, import ban is not sustainable, and import ban is not good because international trade is an important component of the total economy. So, we also wanted the import ban relaxed. So, but the problem was, when the import ban is relaxed, whether the government would be collecting enough revenue through import duty and other levies on imported products, because what we saw was, even in the 2020 budget, import duties and other levies on imported products were brought down. So, actually in a scenario like that, we expected the industry to be in deep trouble really, because if the import duties were in the same structure and the import ban is lifted, then local industry will be in deep trouble, because we will not be able to compete with imports at all really, because Lanka Tiles Group is also a large importer of tiles, because we contract manufacture in India, we contract manufacture in China to augment our production capacity. So, what we were advocating was that import ban should be lifted, but it should be after revising the existing duty structure upward. So, that is why we engaged in a discussion with the tile and sanitaryware importers through the association, and actually we were represented by Sri Lanka Ceramic and Glass Council. So, we entered into negotiations with them, and we agreed that 183 rupee cess is not adequate to support the local industry, because under 183 rupees cess, if imports are coming, imports would have flooded the market really, and definitely the local manufacturers would have had to shut down the factories, at least temporarily. So, that is why we finally came to an agreement to fix the minimum cess at 490 rupees a square meter. But I must say, even at 490 rupees a square meter, imports will be very competitive, because our computations are that when we sell a 2x2 tile at say 1200 rupees, imported product, even after paying 490 rupees cess per square meter, will be selling at maybe 750 rupees. So, that way imports will be still competitive, but I think there will be a fairly good playing field for both local manufacturers and the importers to compete in the market under this new structure.
Okay, that's a great explanation. And now what we understand is that during this lockdown period, you have managed to establish good working relationship with some leading tiles importers as well.
Yes.
So going forward, how do you see this relationship evolving?
See, I think that relationship has the potential, I would say, to continue, because I don't know, I mean, I think we should have looked at that opportunity earlier also, even before the pandemic and the import ban, because there was an opportunity for us to work with the importers and contract manufacture for them, because our product quality is superior to most of the products they import, and we can provide consistent quality product to the importers. And because actually importers have a lot of hardships importing, because they are left with small quantities, sometimes there are batch variations, shade variations in tiles, so their losses would be high, and to cover up those losses they have to keep big margins. But at that time they were able to keep big margins, because tiles are coming very cheap due to the lower duty structure that prevailed. Now, going forward, what will happen is, I think the local manufacturers will work on this relationship. They will try to build on this relationship, because we will be able to finally supply to them at a price that will be more or less equal to the landed cost of an imported product. So if we can match that price with a superior quality product, good service, and long-term commitment, then I think that partnership can continue. I don't see any reason why that partnership cannot prosper.
So now, if we move our focus towards the cost side of it, can you please help us understand the raw material sourcing process of tiles manufacturing?
See, raw material sourcing process is like this. Now, for tile manufacture, you need bulk raw materials, low value bulk raw materials, as well as high value less volume material. Now, high value less volume material comes from mainly Spain and Italy, the European countries, and a little bit from India and China. Now, getting down such materials is not a problem, because those materials are available and they are manufactured in bulk quantities by these manufacturing countries. So we don't have a problem with that. But the problem lies in sourcing local raw materials, bulk raw materials, such as ball clay, feldspar and silica sand. Now, ball clay is primarily found in paddy fields, mainly in Kalutara Vaskadu area, and mining in paddy fields is a problem and it is a challenge really. Because under this Agrarian Development Act, there is a specific provision to say that paddy fields cannot be used for any purpose other than paddy cultivation. So getting mining license to mine in paddy fields is a big challenge. So there is a constraint there. Then in any case, mining in Sri Lanka is a problem, because Sri Lanka is a small country with a fairly high population density. So whenever there is mining, we run into conflicts with the environment and also the villagers really, because the environment problem gets magnified when there are people living in and around the mining area. So as we expand capacity, as we say ready ourselves to expand capacity, we have to be mindful of the fact that we will be finding it increasingly difficult to get raw materials locally, but then we must also understand that importing raw materials in bulk form like ball clay, silica and feldspar is completely out of question, because the cost is prohibitively high. So that is the supply part. So actually when we expand capacity, we have to keep that foremost in our mind.
Okay. CBSL projects the GDP to grow in excess over 5%. In that case, what kind of growth we can expect from tile sector?
See, my experience, what I have seen in the last 20 odd years in this industry is that generally demand for tiles grows at 2.5% or 2.5 times the GDP growth. So that has been the trend in the past. Now, if you are saying that the economy is going to grow 5% this year, I expect the demand for tiles to grow 12.5%. So that is the relationship I have seen over the last 20 years.
To conclude, now what kind of opportunities and challenges do you see in this tiles industry other than relaxation of import tiles?
Actually, I see a big opportunity in the tile industry in this form. Now, 2019 August, USA imposed anti-dumping duties on over 2,000 Chinese products exported to the USA. Now, ceramic tiles, ceramic and porcelain tiles is one such category. So in 2000 August, when these anti-dumping duties were imposed, Lanka Tiles Group, what did we do? We entered into a joint venture with a Chinese manufacturer and an American buyer to set up a mosaic factory in Sri Lanka. We converted part of our factory to produce mosaics. Today, we have a situation where we can't meet the demand for mosaics from America. Actually, so much so, we are thinking of expanding that capacity, and if possible and if necessary, set up a new mosaic factory. So like that, now those products are up the value chain. Now when a normal tile fetches say $5 to $6 a square meter, of mosaics, we are selling between $12 to $30 per square meter. So that's a great opportunity, because I think going forward, see this block the USA created, America, India, Japan and Australia will always benefit countries like Sri Lanka, because Chinese products will continue to be uncompetitive in the US market. So there is a great opportunity for Sri Lanka to capitalize on that, and ceramic sector is one sector that can greatly benefit if the manufacturers have the mindset to produce a product that is exportable, because manufacturing mindset is different from exporting mindset. All manufacturers cannot export. So if the manufacturers can change their mindset to be major exporters, then there is a great opportunity. The challenge will be, of course, working with partners is a challenge, and then operating the factories in the local environment is a challenge, because the successive governments have not had consistent policies vis-a-vis tariff and duty structure. So that is a big challenge, because that is a scary thing, because to expand capacity in this industry, you need to spend 4 to 5 billion rupees. So before you put 4 to 5 billion rupees into an investment, there should be clarity as to the long-term continuity of the fiscal policy of the government. So I mean, what I want to say is that generally investors prefer consistent bad policies to inconsistent good policies. So that is the challenge. So we have to take a view whether the policies are going to be good or bad, consistent or inconsistent.
Okay. Thank you very much for your time, Mr. Jayasekera.
You're welcome.
So we are signing off from today's sessions. Thank you, everyone.